Welcome to The Explainer. Wow, what a 24 hours. The financial world basically just held its breath and then let out this huge sigh of relief in the form of a massive global rally. So let's break down the one event that triggered this massive shift and figure out what it means for the markets from here. You know, this quote right here from a market strategist, it just perfectly captures the feeling that ripped through the markets. I mean, for weeks, investors have been just bogged down by all this geopolitical tension. This was the exact release valve, the exit ramp everyone was desperately looking for.
So what was the big catalyst? What caused this huge move? Well, it all boils down to one thing, a sudden, and I should say tentative, ceasefire between the US and Iran. This is a huge development that, at least for now, seems to have pulled everyone back from the edge.
So let's get into the details here. Iran has agreed to a 2-week ceasefire. But the really crucial part? They're reopening the Strait of Hormuz. And if you're wondering why that's such a big deal, just remember, a massive chunk of the world's oil supply flows right through that narrow channel. Reopening it, well, that just instantly calms all those fears of a supply shock that could have crippled the global economy.
And look, this is way more than just a simple pause. Tehran came to the table with a whole roadmap. They've laid out a 10-point wish list, and it's pretty comprehensive. We're talking about things like the withdrawal of U.S. forces and lifting all sanctions. It really signals that they're coming to these negotiations scheduled for April 11th from what they see as a position of strength.
Okay, so how did the markets react? It was immediate, it was decisive, it was what we call a classic risk-on rally. You know the drill. Investors felt confident, so they started pulling money out of safer things like bonds and piling it into riskier assets like stocks. A total shift in sentiment.
And the most dramatic impact? You gotta look at oil prices. Crude just plummeted, down about 15%. It makes sense, right? With the Strait of Hormuz back open, that fear of a supply crunch that was propping up prices, it just evaporated. Literally overnight.
And of course, on the flip side of that coin, equity markets absolutely loved it. Indices all across Asia started pushing higher. Take India's Nifty 50, for example. It jumped almost 0.7%. That renewed confidence just lifted the whole market.
All right, let's pivot now to the currency markets. I want to see how this whole geopolitical shift has basically redrawn the technical charts for all the majors. Is this dollar weakness a consistent theme?
Okay, first up, let's look at the US dollar index, the DXY. You just don't see a big gap down like this very often. But that's exactly what the ceasefire news did. It completely erased all of those recent safe haven gains. Just gone in one fell swoop.
So the tactical view here has completely flipped. The play now is to sell on a rise. But, and this is important, traders are being cautious. They're waiting for confirmation. They want to see if the dollar fails to get back above that 99.64 resistance. If it can't, then the next stops to watch are down around 99.00 and 98.60.
Naturally, with the dollar getting hit, the euro was one of the biggest winners. The EUR-USD pair just shot up, breaking right through a key pivotal level as all that risk appetite came flooding back into the market.
So for the euro, the strategy now shifts to buy on dips. But here's what's so interesting. This rally happened even though we got some pretty weak PMI data out of the Eurozone. It's a huge sign that for now, this geopolitical story is the only thing that matters, completely overshadowing the fundamentals. And all this is happening right before today's big ECB meeting.
And it's a very similar story over with the British pound. The GBP-USD pair, or cable as it's known, also rallied hard as that risk-on feeling just swept through the currency markets.
And just like we saw with the euro, this rally is happening despite some pretty grim data at home. The UK's composite PMI was revised sharply lower, but the market, it's completely ignoring it. Right now, the global risk-on mood is the only game in town. Traders will be keeping an eye on some key housing data later today, though.
Okay, now for USD/JPY. And this one's a little bit of a head-scratcher. Usually, in a big risk-on rally, you'd expect the safe haven yen to weaken. But what happened? The yen actually got stronger against the dollar, pushing this pair down. It really suggests there are other things going on here, maybe something to do with bond yields.
So yeah, this one is tricky. If you look at the long-term chart, it still looks like a buy-on-dip setup. But, and it's a big but, the momentum for that trade is just fading, and it's fading fast. So the tactical view here is pretty simple. Be cautious. For now, it's pretty much a no-trade zone until things get a bit clearer.
All right, let's bring our focus back home to India. The markets here were definitely upbeat, but you could also feel a real sense of caution in the air.
So the rupee strengthened against the dollar, which pushed the USD/INR pair down toward that 92.90 support level. The technical view is sell on a rise, but again, traders aren't getting ahead of themselves. Why? Because everyone, and I mean everyone, is laser focused on the upcoming RBI monetary policy decision.
And what about the Nifty 50? It did extend its gains, which is great to see. But I want you to pay close attention to the tactical view here. First signs of the bear phase ending. Those are the key words. First signs. We're not out of the woods yet. We've got the first clues, but we absolutely need more confirmation before anyone can say the recent downturn is officially over.
So, that brings us to the big question. What's next? It feels like the geopolitical storm has calmed down, at least for now. But there's a whole slate of key economic events on the calendar for today that could easily stir things right back up.
Here's a quick rundown of what's on the docket for today, April 7th. In India, we have the huge RBI interest rate decision. Over in the Eurozone, we've got the ECB meeting. Both of those are potential market movers. Plus, we're getting factory orders from Germany and construction and housing data out of the UK. So yeah, plenty to watch.
And all of this leaves us with one final and really crucial question. The market got the relief rally it wanted. It's priced in peace. But when you look at how delicate these talks are, combined with a packed economic calendar and those nagging signs of slowing global growth, you have to wonder, is this rally built on something solid, or is it just wishful thinking? The real test, I think, is just getting started.